Good morning, traders. We'll get started in just a minute. Good morning, everyone. Coming in. Happy Friday. Happy Quad Witch. If anybody has any questions about charts or wants to talk about anything, if anybody has a microphone that would like to chat also, I'd be more than happy to chat live with somebody if they want to go over some charts. Basically, this is going to kind of be an open forum. I'm going to look through some charts. We'll discuss some things, but I've had quite a few questions this week. I've been DMing people back from in the room. I went ahead and sent this out to YouTube Live, so there might be some people asking questions on YouTube Live. I posted on StockTwits also, so we can just go over kind of what we do in the room, and if anybody has any charts they want to go over, it's pretty much open this morning, so we'll see what we get. I'll wait about 5 more minutes and then we'll get started. Hope everybody's having a great Friday so far. Looks like the market's about flat to, yeah, up 237. So about flat today. Good morning, Ryan. Good morning, Nick. Good morning, Eli. I know I've got quite a bit of feedback this week that these kind of morning things helped, seem to help a lot of people just for what to look for. So I'm just going to kind of go over some things again. Like I said, it's going to be open forum. So anybody want to talk about anything or any charts? I posted, I'll just go ahead and do a little commentary. I posted a link in the hashtag social on the Slack for anybody that's a member of the closingprint.com. And I hope it sparks some discussion about day trading with swing trading. And, you know, I didn't post it to be negative to day trading because a lot of people are very successful day traders, but a lot of people struggle at day trading also. And, you know, they just kind of bang their head against the wall over and over and over, you know, trying to day trade, spinning their wheels. They get frustrated, you know, people blow up accounts. So I kind of just posted that, you know, so people could get a perspective that there's multiple ways to trade. And I'm going to say most people are not successful day traders. It's just extremely hard for people to sit in front of the screen and watch tick by tick and do it day after day. And what happens many times is if day traders, if you're successful, they transfer to swing to position traders because they want to have the freedom. I mean, that's what everybody wants in trading, is, yes, it's about making an income and paying bills first and foremost, but the next thing's about the freedom that comes with trading. And if you're wanting to get away from your 9 to 5 job, um, but you're stuck day trading every day from 8:30 to 5 o'clock every day, then you're not really getting that freedom, other than being able to travel wherever you want and trade. But then if you're day trading, then you can't enjoy anything else. And I caution people, obviously we know social media is mostly 99.9% farce, and everybody makes it out to be their greatest life ever, which is not really true. And that's why I try to be honest about it. I know a couple of the guys that I follow on Twitter have been extremely honest this year. You'll see people that I've gained 150%, I gained 200%, but you also see a couple of other people that struggled a lot and rode this whole thing down and have just maybe got back to even this year. So I just want everybody to understand that, what you read and see is not true honesty, and I'll post my losses. I'll post some of my wins. It's just, it's real. Trading is hard. It's like this year has been, I think, exceptionally hard. If you didn't get in the March and April lows and rode up, your 401k, you're probably just back to even, or maybe you're down 20 or 30% because you still haven't got back in. So I just want, people to understand that there's kind of the whole gamut, of people this year on the trading. And then, we're kind of in this euphoric period at the moment where, Mark Minervini and the other guys talk about it's the easy penny. And that's what we've seen the past few weeks. It's kind of been the easy penny, on this, on this kind of move up in the Qs and the SPX. So, and this is when, I'm not this past 2 weeks, I'm not, positioned as much as what I feel like I should be. I've got great positions on, but I feel like I probably could have pressed even more these past 2 weeks, 2 to 3 weeks, and made a little bit better. But it is what it is. It's been a great year. We've had a great run on a bunch of positions. So I didn't really want to press the end of this year. I kind of want to just, finish the year off great and not be overexposed. So that was my thinking, and I'm okay. I was kind of beating myself up last night to Ryan and Chad, about, there's so many things that I'm seeing that I could have pressed the gas on and been in a lot more these past 2 weeks, but it's okay. I'm okay with that. So does anybody have any charts they want to look at? I'll just go through, Exis, yeah, I saw that one, Ryan. I like that one. Okay, so I'm gonna basically go here. Hold on, let me do my let me start recording. So okay. All right, good morning, traders. It's Friday, December 18th. Hope everybody's having a great week coming into the weekend. We're 7 days from Christmas. So we're going to go over some charts here for the closingprint.com. If anybody has any questions, we'll go over that. We'll open up the mic if anybody wants to talk. But so this FinViz scan that I went over, I think on Tuesday and Wednesday, I posted a hat tip to Jack on Twitter, which I posted his name and stuff. I'm giving him all the credit for this. But I want to show people kind of, so what's nice in stock charts is you can do a 1 week summary, about these stocks that we're watching. And these are some of the percent moves in 1 week. Okay. And you can see, on these, over here, I mean, some of these have had just massive moves. Chewy was our kind of number one, that we pointed out on Wednesday. That setup on the 30-minute chart was ideal. But so I guess what I'm trying to say on this is you can just be in a few of these. You don't have to be fully leveraged in all of these, positions. You have to pick a few. You have to pick what fits your trading style, what fits your risk profile, and just be in a few of these. If you're just in 3 or 4 of these, say you have a $30,000 account, you probably only need to have 3 or 4 positions on, okay, per IBD rules, and 10% of each of those needs to be where you're at. So I'm saying this as, 1 week gains on some of these is perfect. This is where you need to be. And then if these 1 week gains, turn into swing trades or position trades, then that's how you morph into, let's go to like a 1 month. Okay. That's how you morph into these, the 50, 60, 70, 80% gainers. It starts with a swing trade. And CV talked about this yesterday. He does a day trade and then kind of morphs it into swing trade. I kind of do a swing trade and then morph it into a position trade if it's outperforming. Okay, if it goes up 10 or 12% in a week, that's a green light for me to morph this into a position trade. Okay, and you don't have to be all in your position at one time. Okay, you can enter the position tier, and that's what I tell people. Scott Rether talks about tier 1, tier 2, tier 3. I talk about the kind of the same thing, 30, 30, 30 position, or your initial is 40 and then 30 and then 20, or maybe it's 50 and then 30 and then 20. I mean, you don't have to get to 100%, but that's how we kind of morph into this. So our initial Chewy entry, if you wanted to do the swing trade, which this has been just a massive day or daily chart that has just been a true leader, true market leader since breaking out this base right here, and really hasn't broke the 21E. It did have the 50E test here, which was almost a gift, which was the 10-week on the weekly. So, but anyway, back to our swing trade is if you're in this position right here when we showed it on Wednesday, and let's just say you're in a tier 1, or you didn't even take it until the breakout of tier 1, and then let's say you were building your flag here and you said, okay, I'm going to get in a tier 2 position, or maybe even up to a tier 3, depending on what you're in a tier 3 position. So then you move your stop up, let's say to 96 on part of your position. Okay, so then if it comes back here, all right, you're going to get stopped out a little bit. And then let's say that you move your other stop, just above break even, say down here where the 5 DMA, the 5 DMA is rising up, okay, which is a nice little intermediate term, moving average to watch, not an absolute, but let's, then if price comes back and at least touches the 5, which it's been riding this whole time, then you're still in a tier 1. You locked in profits up here, roughly 12%. You're going to lock in a profit here, and then you're still in a nice swing core position. Then you could even put your stop, back to flat, depending on where your entry was. If your entry was here, then you put your stop here back to flat. Your entry was here, you put your stop back here to flat. So if this comes all the way back down to 86 and then takes out your tier 1, your tier 2, and then maybe your core position, then you keep it back on your watch list and you flip to the daily chart and you say, okay, test the 21E. It's been holding this whole time. Then maybe I look to get involved again. All right, so that's how we do these swing trades. I post my swing tracker in there. But this is how you're in a trade. You try to capture the most uptrend, the longest uptrend, and you're able to lock in profits. Okay, the main thing for new traders that I want to get across swing traders is you have to start locking in profits. Okay, and now some of my students that I talk to, I'll tell them to start locking in at 3%, 5%, and 7%. Okay, so that pretty much gives us a free trade. We've taken our risk out. And then all you're doing is trying to, how much profit can you get out of it? Okay, because you're not going to take a loss. It's not going to be a green to red trade. Your initial risk is out. So then basically you're just free rolling the trade and free riding and seeing how far it can go. Now, I was discussing on Wednesday, I said, this is a Livermore thought, Jesse Livermore, when they start going through round numbers, they usually accelerate the round numbers. Okay, so we went through 70. We went through 80, we went through 90, and most stocks that go through 90 get to 100. And it's just a fact. You can look at the data. It just works extremely well. So that's why, I like to look for stocks above $50. That's kind of my sweet spot for me, sweet spot for me, $40 to $50. Because if we start going through $40 and $50 and then $60, the chances of getting to 100 if they have the EPS and institutional support is much more. Okay. And that's what I want. I want the double. I want the 50 to 100 in, 6 to 8 weeks to 12 weeks. I mean, so this is I'm going to say a $60 stock. This is back in November, 60 to 100 in less than a month. Okay, so 4 weeks. If you held this and had a core position and you're still in it, which you should, depending on if you're using the daily and the 30-minute or whatever your time frames are. But this is what you want here. If you're properly positioned in this with the right size and you double your money, okay, your account will just have crazy outgrowth. And you only have to do this a few times a year. That's what I'm trying to get across to people is you don't have to be in every stock. Okay. Most of the times, 7 out of 10 stocks are going to come back and hit your initial swing stop. All right. But when they start outperforming like this, you have to recognize it and you have to get in and you have to stay in, because these are stocks that will just 10x or 20x your account so fast. Okay. Now, the market's been behind us. That's the key caveat of this. In the Can Slim system, the M has to be with you and the market's been with us. But this has been a leader pretty much all year. And it's been holding up well. It's been showing relative strength to the market. And that's why you want to get involved in these. All right. So for the new trader or trader, it's trying to balance that of, is this a swing position or is this a core position, and how long am I going to hold it, and can I manage the risk? And again, this 265 here, 272 is the exact number, but 265 is roughly the 21E. All right. You should be able to manage a trade above the 21E and hold your trade for as long as the stock is above the 21E. Now, for me, the 50 and the 200 are really important because those are institutional spots. And if we go back to the daily, we see that it tested that 50 back here in November and held, and then formed this beautiful flag right here. And look at this. We had this washout and this beautiful volume VCP here, low volume flag, took off from here, another low volume flag under the proper base, proper buy point base, broke out, came back and retested. 50% of stocks that break out of a proper buy point will come back and test or undercut. You have to be able to manage this. And if you got stopped out, you have to be able to get back in and hold this. But if you're in from down here, you should be able to manage and hold this, because this is still just the 21E. That should be your risk point. And then you're able to get this outsized growth. So if anybody has any questions, we'll go over that. But these are the stocks that you have to be able to hold. I'm going to say there's probably some people in from down here over where it crossed the 200. I'm not in from there, but this is like just crazy growth. Its growth started back here, when we had the March and April turn, and it's just been a leader ever since. And if you use the 50-day, and trade it around it, or the 200-day, then you're still in it and you've had a massive run. But if you're a shorter term, kind of mid to long-term trader, then this is something to print off and study, and then figure out why you should be in and why not. So I'm going to pull up EXAS on MarketSmith just because I believe it's a proper base and it looked good. Yeah, so here's EXAS. I think Anton in the room has been in this also, and we've traded this one before. But this is just building the cup and handle. Estimates for next year, they were revised up here, -3 though, so nothing on the estimates there. But huge institutional ownership has almost doubled since 2018. These big funds are in it that I like to see: T. Rowe Price, Columbia Acorn, JP Morgan Large Cap, and Harbor Mid Cap Growth. They have decent, beautiful pocket pivot yesterday also. Agree. So the volume is there. So let's talk about how we would manage this trade. Okay. So if you're going to do a proper daily Can Slim system buy, you would buy as it's breaking out of this base here. Okay. So we can set an alert here. I'll just go ahead and set an alert. Oops. Let me set the, so you can set an alert on the base. Let's not set an alert on the base. Hold on. Set an alert. There we go. Okay, cup with handle. You have to click in the cup there. Oh, sorry. Close the lower window, make it bigger. Okay, here, I'm just going to move this down so I can keep it there. There we go. Hopefully that helps. Okay. Here we go. Move that over too. There we go. All right, so we got a beautiful cup and handle forming. All right, so in Market Smith, they give you how long the cup is, 36 days. The depth is 21%. So we got the proper cup. We're forming the proper handle here, and then we're looking for this to break out above this right here. So I set an alert. So when the price starts moving above this, Market Smith will send me an alert, and we'll look to get involved. Now, if you wanted to look to get involved on a shorter term time frame, we'll go back to a 30-minute, but this is a nice downtrend line here, okay, that it crossed above. So you could get involved here with the stop below here, which would have been your best risk reward. So we'll see how this acts today. This may completely fill out this handle a little bit more right under this proper pivot buy, which would be ideal. I'd love to see this build a little bit of low volume right through here, right under this, and then get ready to run. The other thing I want you to notice is on this handle, this volume dry up, this is essential. Okay, this is like an A++ setup for me and many other traders out there. The same thing happened over here. See this base this was kind of not a proper cup with handle, but you had this low volume dry up, then EPS, and it just blew it out of the water with huge volume. So this is what we look for. If you only traded this chart pattern, cups, cup and handles, and flat base from IBD, and you manage your risk appropriately, you do extremely well because you're buying at the proper time when stocks are breaking out. Now, a lot of people like to front run the cup and handle, okay, which is great. You can do that. The chances of you getting stopped out on positions and having smaller losses a few times is probably a lot higher. But you can be in these in smaller, maybe tier 1 or starter positions. Then when it decides to break out of the proper pivot, you can add on, and then you're in a nice position. So this is we're gonna follow this one, and we're gonna see what happens. Obviously, the market's been at our backs, but we'll see how this works out. Okay, so I want to chart this, and so we'll follow this up maybe a week or so later. I'm going to be I'll look to get in a position in this. Let's go to the 30-minute. Okay, so our downtrend break was ideal. Ryan, are you in this already? I don't know if he's in this already, but this would have been just stellar setup right here if you could have got in the 128 to 130 with stop below 126. So now we're up here. We probably got a little bit higher risk. So what I'd like to see this is build out this flag here in the 137 to 134 range and give us the ability. Yeah, A+. Yeah, that's an A+ setup. No, I missed it too. Give us the ability to get in here with proper risk. So if you're using a 7% stop, this shows you where your stop loss would be down here, kind of where this engulfing candle engulfed this whole cup and handle. So we're going to watch this today. I might take a starter position in it. I would like to get my stop loss down here under this 21E and 126. So I would need to have this down roughly about 130 probably to do that for 7%. So it'd be 6 points. Yeah. So it'd roughly have to be in around 130, which I don't know if that's going to pull back with that massive pocket pivot. So we'll see what happens today. You could do this. So what you could do is you could do a tier 1 size, and then you'd be roughly running a 10% stop, but you could do it be a much smaller size. Let's say it's less than tier 1. Okay. Let's say your tier 1 is 25 shares. Let's say you took 10 shares and then you're running a 10% stop, which is roughly $10, somewhere around in there. So then you're risking only $100. Okay. So if you have a $30,000 account, that's a very small risk, but then you'd be able to upsize pretty quickly, because if you're in your starter position and it moves up 10%, then adding on to your position is much more advantageous. And then you don't have to worry about the risk as much. Yeah, Nick, I agree. Building positions is what I try to teach everybody. Start with the tier 1s, then go to a tier 2, and then go to a tier 3, and just keep building your position size. Because your initial risk, once it's gone, it's a free trade. Okay. And then you can build onto that, and then you just let it run. And that's how we get these, outsized winners. Somebody else posted a couple other ones, space and apps. Let's look at space. I know space has been pulling back, I believe. So this is just pulling back in the base. My only concern was this higher volume. I think did they have some news out? I don't watch all the news, but it's just pulling back to this base again. This has been, it's been a volatile stock. I do like that the RS line is holding up, so we'll see what happens moving forward. Some funds are starting to come into it, but down here, it may be, a place to start getting involved. There's just so many other stocks out there that are outperforming. I mean, I think I'd rather be in Chewy than Space. Who posted this? Eli. You know what I'm saying? I mean, I'd rather be in Chewy. I'd rather be in the EXAS. I'd rather be in stocks that are in the top um, sectors. Okay, because aerospace and defense is 103 out of 197 on IBD. So I'd rather be in maybe this that looks pretty stellar. Okay, that broke out of a proper base and is up 20% in 3 days. I think I'd rather put my money to work there. Now, it did have decent volume, reversal yesterday. So I would watch for this to come back and touch the pivot. All right, so you keep this on your watch list to come back. 50% of all stocks come back and test the pivot. If it comes back and tests the pivot on lower volume, and people step in to buy, then I would absolutely look to start a position in this. Relative strength's 99, funds are increasing, and then I want to see some bigger funds get involved in this, but we'll see what happens. But look at the EPS. I mean, it's just stellar. So apps has been just a tear. One of my favorite stocks to trade this year. It's just been just a beast. I mean, I don't know what else. It's it's a software stock. It's been a money machine on many levels, on short term to long term, and then it's just going to highs. My only concern with a lot of these stocks is they're getting a little stretched from the 21, the 50, and the 200. Okay, these have been some euphoric rides. So I think we're probably getting close to some flag to pull back, and I hate to say that, but again, the market can go much longer. I mean, look at these 2021 estimates, 210%. So this is what I'm talking about, the round numbers. Okay, this one is through 40 and through 50. So, I mean, for me, this is probably going to be $100 stock. Okay, and I don't give targets, I don't give estimates, but I'm looking this pretty easily probably to be $100 stock. I don't see any reason why it can't, unless for some reason they do something stupid and their EPS comes crashing down. But I don't see any reason why it can't be. So I would look for this on any pullbacks to get involved and manage your risk. Now, to get in these stocks, it broke out of a base that wasn't really a proper base. I don't know about the weekly. Let me look at the weekly. So it almost had a flat base there. But I just look to get involved in this thing, okay, whenever it pulls back. I mean, it's the true market leader. So, I mean, a pullback down to the 21E or even the 50E is normal price action for these big stocks. Does it get there? Probably not. But a pullback down into the 40 to 45 range would be probably A plus setup with, dropping volume. You can see what happens in this kind of flag here. See how the volume just drops off. This is what I want. I want new traders to train their eye. I used to watch this, but this past year I've got much more respect for the volume, just from listening to a lot of guys, Mark Minervini, David Ryan, a lot of these other CanSlim guys. It's like this is almost just a signature that should just jump out at you, that when these true market leaders start to consolidate and the volume is extremely low, there's no sellers in here. There's just nobody giving the stock up, giving the stock back. Everybody's clutching onto it with both hands, and then getting ready to get involved again. Yeah, I agree. The pattern, and also what we like to see is when the price pattern matches the volume pattern, it's like almost the same. Okay, when the price pattern starts to tighten up, I mean DQ was the deal on the price pattern. Okay, you see how tight this got for 3 or 4 days here, and the volume just dried up, and all these closes were almost just 1, 2, 3, 4. All 4 closes were almost just right close to each other. Okay, the opening, high, low, and the close. Okay, so that is definitely what you want to train your eye on. NVTA, let's look at that one. I can't remember the stock. I don't look at this one much. Yeah, so this is a failed breakout. Okay. And this is what a lot of the guys talk about is some of these don't work. Okay. There's a great IBD webinar. I don't know if I can post it to you guys, but they posted their winners and they posted their losers. Okay. So I'm going to talk through this and I'll tell you why I would instantly be out of this thing. All right. If I was in this on the breakout, okay, this day right here is a day of take notice to me if I brought the breakout. Okay. The reason is, I hope everybody can see this, is it broke out. Let me see the volume. So the volume was 75%. We like to see that over 100%, but the volume is 75%. So decent breakout on a cup and handle, but it immediately reversed the next day and undercut the low and finished on the low. Okay, this is a day to take notice if you bought a breakout. This is a day to say, I'm out of the position, even if it didn't trigger your stop loss. All right. I mean, I think I would definitely be out of this depending on where you bought at. All right. Now, if you bought down here and you wanted to keep your stop at flat, okay, because these are 21 and 50 are really tight. Okay. So I would say, okay, I'll give the risk to here. But so then it held the 21 and 50. All right. But you also got to notice here is the volume on the next up day was extremely low. That's another kind of flag for me. Then it just kind of chopped around. Okay, it tightened up. If you're still in it, you're all right. But then it had this move up. It hit 20%. And IBD's rules are 20% you take profit. All right. So you would have been taking profit that day. And then this massive outside day here, okay, that finished on the lows on higher volume. Okay. If that's not a day to take profit and resize your position, I don't know what is. So that needs to be something that you instantaneously look at. The next day, tried to go, finished on the lows. Okay. So you see how it can't even get above the previous day low and hold above there. Okay. So that's no acceptance by buyers to hold this stock up whatsoever. All right. They're dumping it, just absolutely dumping it. All right. Pretty high volume there on that day. Had a bounce. Basically, this pretty much just sucked everybody in on a doji day and then gap down. Okay. So it's below the 50 day. It's below the moving averages. It's below the base on the highest volume since back in June. Okay, the highest volume day since back in June. Does everybody see this? All right, right here, volume day, highest volume day since back in June. All right, so that's an instantaneous sell, even if you're trying to hold on to it and you're underwater. Okay, you're out. You're out of the position. There's no reason to hold this. I don't care what any of the fundamentals say. I don't care what any of the news says. Technically and volume wise, you're dumping it. I hope everybody can agree with that. Does everybody understand that? I mean, you're just out of this position. All right. So if you were in it and you took profits at 20%, then maybe you're back to flat, but there's no reason to be in this. Now, could this thing just rip higher from here? Absolutely. Okay. But your mental capital that you expended on being in this, living through this part right here, being up 20%, and then if you didn't take profits in 2 days, you're almost back to flat or underwater again, is wasting mental capital. Okay. Do you understand what I'm saying? NVTA compared to Chewy. Okay. Which one do you want to be in? All right. And that's what I'm trying to get across. Which one do you want to be in? All right. Get rid of those stocks that are just draining, very draining on you. You know, again, this is probably what is this a bio? That's medical services, but okay, it's testing and all that stuff. So, and that's what I'm saying. 7 out of 10 times, maybe 5 out of 10 times, these proper bases don't work. They just don't work. Okay. I can't remember. There was one that David Ryan went over that was Fresh Pet. That was almost perfect. Yeah. So he had this cup here where I think it was this one where he was talking about, maybe Ryan can remember. He bought and it just failed miserably. It might have been this right here. I think it was this right here. Was this Thursday? 12/8. Yeah. Okay. So this was it. Okay. It broke out on so 36% volume. Yeah, that was it. Okay, so not enough volume on that, but it was breaking out the base, had strong earnings, institutional growth. So you could have got involved here, but it immediately failed. Okay, immediately failed and come back and undercut the low. All right, and he was just like, I'm out of this. You know, it failed. I'm out. There's no reason to still be in this. Now it's still basing, so that's why you want to keep it on your watch list, because if it decides to go back up through this pivot, then it might be, you know, a good buy. But But that's what you want to do. You know, you just get out of the position. There's no reason to stay in it. There's no reason to hang on to it. Just get out and move on to something else that's moving. All right. This Market Smith has one of the greatest scans. It's called the near pivot, and on their open stock ideas. All right, and I'll just flip through these. What time is it? Oh, CV is probably broadcasted too. So this is one. I'm throwing this out there for all you guys. CDNS, write this down. Okay, increasing volume, decent EPS, huge institutional ownership. This is looking to break out. Okay, so if this breaks out, you might want to get involved in it. It already had its VCP down here. See this right here? VCP was down here, shook people out, held the 21 day, which was an ideal shakeout day. I think the volume was nothing. Yeah, it's pretty low, but it finished on the lows, held the 21 and 50, which are extremely tight. I like to look for this. If these 21 and 50 are almost stacked on top of each other, this is a great risk reward area to get involved. Then it's building the right side of this. It's not even a cup. They're calling it a flat base. So look for this to break out. Okay, that's one to break out. IDXX is just a big flat break base here. Possible one you could look at. Logitech. This is wide and loose. I really don't like to be in those. Okay, just because the risk is a little bit higher. I like tight price action. Chegg is another one we traded early in the year. I love this big, massive base double cup forming. That's a $20 measured move if it decides to break out. All right, that's still online learning, which I think is still good. CRL, another one to watch, moving in. And PFSI tried to break out here. Actually did break out here. I had an alert set for this. So now it's moving on up, and then the next pivot up here is 67.77. So, all right, I would assume CV is probably broadcasting. Hope that helps everybody. Everybody have a great Friday. It's quad witch, so manage your risk. If anybody has any questions, feel free to DM me, but hopefully that kind of gets to, you know, how I trade and how you can manage your trades. So, okay, great. Everybody have a good day. We'll see you in the room.